Okay, it's 2 minutes past, so I'm going to make a start now, even I'm expecting a few more people to join. I'll just have to let them in as and when they decide to join. So, hi everyone, welcome to this second session of the Tax Lab. So, in this session today, we're going to again focus on the tax advisory skill. In the last session, we looked at it from an angle of simplifying what you're saying and writing to the client to make sure that they can understand what it is that you're telling them, essentially, so they can actually understand and do something with the advice. In this session, we're going to go take a slightly different angle. We're going to start by taking a scenario that someone has sent to me prior to them actually establishing and drafting the advice. So I can talk you through the different things that will be going through my head at the different stages there, so that you can obviously learn and hopefully take away something to help you do that better in your own world. So I won't have too much on the screen throughout today, but I have this on the screen just now just to quickly whiz through the scenario and then we can start going through it bit by bit. So the scenario that we've got is that there was a client that is a beneficiary of an offshore trust. And just to start here, I absolutely know nothing about trust taxation. Well, nothing useful anyway, that's for sure. So this is a scenario that I actually know nothing about from a tax perspective for sure, but that's not going to matter for what we're going to talk through in this session. So the trust that we got here was settled by someone who was non-UK resident. And so I had to find out what settled meant in order to do this session today. But basically that means the person that's put in the money and the assets into the trust, essentially. So within the trust, there is an offshore company that's 100% shares are owned by the trust. The client, so the individual, is not a director of the company. The company is not a trading company, it's an investment company. The client, the individual, is actually going through a divorce and needs some money to buy a new home for him to live in whilst the divorce is going through, which will pay off once the divorce settlement has happened, which is hopefully in 18 months' time. But the bank won't lend him money to be able to buy this home. And so the query that this client raised is like, can the offshore trust or can the company within the offshore trust lend him money to be able to buy this house that he wants? And he emailed the advisor in this case to ask if there's any tax consequences of doing this. And so right off the bat here, my initial thought about this, and maybe this is partly because I don't know anything about trust taxation, but this felt like an exceptionally complicated scenario to me right off the bat, and that's because it's involving things that have they're offshore. So there's an offshore trust. There's also the person who settled the trust that is non-UK resident. So that's potentially two different countries there where that are already involved to some extent and impacting things. And then we've got the individual who's resident in the UK, I assume. I don't think it's stated here, but I believe that is the case. So it's essentially three jurisdictions that are in play here. So it felt already like a really complicated scenario. And so whoever's dealing with this definitely needs to have trust expertise before jumping into something like this. Otherwise, they're just not going to be able to guarantee that they're going to be able to provide optimal advice, that they're not going to be able to guarantee that they can make sure it's right as well. And because this is such a complicated scenario, and or at least what I believe would be a complicated scenario, whenever I'm giving advice in situations like this, pretty much one of the first things I think is what resources have I got available to me to help me establish what the advice is and to understand the relevant tax rules that are in play here and how they apply to the situation that we have. And so I was thinking, okay, I don't really know anything about trusts. Where do I start here? But it feels complicated. So whenever something feels complicated, my starting point for finding a relevant resource is to look for a very specialist resource that's particularly on that subject. And so in this case, what I want to have a look for now is I want to see if I can find any resources that are specific to the taxation of trusts. So that's what I'm going to have a little look at now through Tolly's. So I'm going to do this in a few different places because you never guarantee to find the resource or a good resource in any one place. So I tend to look in a few different places. I want to start with Tolly's right now because I feel like Tolly's probably has a good book that's specifically on the taxation of trusts because Tolly's do have a lot of different books and particularly they have books on very particular topics. So if you've got Tolly's Newsweek before, you'll know that you've got this research element here. And what you can do is you can explore all the different books that they basically have, all the different guidance that they have. And in this case, because I'm interested in trusts and I can see that there's a heading here for trusts, I'm just going to go there. Now, first one, taxation for executors and trustees. So I think that's got to be to do with when someone dies, more likely than anything. So I'm thinking that's probably not going to be relevant in this case. As far as I know, no one's died in the scenario that we've got. It's definitely not part of the facts that I was given. This one clocks offshore tax planning, which does say here that it's got expert commentary on the use of overseas trusts, companies, etc. And so I'm thinking that could be relevant, right? We have got an overseas trust in this case, so that could contain useful information that I need to use to get to the bottom of the tax technical of this scenario that we're dealing with. Another one we've got here, Tolley's UK Taxation of Trust 2024-25. So it's exactly what we want to talk about here. So onshore and offshore trusts, great, because we've got an offshore trust and it's talking about the different tax bits. So based on what we've looked at so far, my starting point, if I was going to choose one of these books here, would definitely be this book here. So I'm just going to open that very briefly. And because I don't know anything or very little about taxation of trusts, I need to figure out what taxes are going to be in scope. Because before I start advising a client, I need to make sure that I'm very clear with them exactly what the scope entails, like what taxes are covered by the piece of work that we're doing and the advice that we give him. So I'm just going to have a very, very brief look through some of the contents pages and the headings of this book here, just to see whether anything pops out as potentially relevant and helpful in relation to the taxes that are in scope. So straight away, I can see that income tax is going to be relevant. I can see that capital gains tax is going to be relevant. They're talking about inheritance tax. And so straight away, I've got a pretty good idea of three taxes that need to be in scope here. Looks like stamp taxes might be in there too, and there might be some other things. So I'm starting to get a feel for what taxes are in scope for this piece of advice that I'm about to give. So I would probably, if I was doing this for real life now on the job, because I found something that's so relevant, I would probably start reading through each of these chapters that we just identified to start getting a bit more information, a bit more knowledge, so I can start narrowing down my research and figuring out what the advice is. That's how I'd go about it. But just because I appreciate that some of you here will not have Tollies, I'm going to look in a few different places now too, just to give you some other places where you can start like going to find the information that you need to be able to give the advice that you want to give. So another place that I often look is Corona Eye. So I know quite a lot of people have Corona Eye nowadays, but not usually smaller firms like smaller accounting firms because Corona is quite expensive, but typically it is a really good resource. Just like with Tollies, there is like specialist books or specialist titles as they call them. And so I'm going to have a look there to see if there's anything potentially helpful there. And also the other place where they tend to have these book type things is this practical guidance for advisors. So I'm going to open both of those. And then I would just look through the different ones to see whether any are potentially relevant. But when I'm looking through this list now, I can't see anything that, oh, the only one that's got the word trusts in is this one. So this one might have some useful information in relating to trusts, but it seems like it's to do with more planning purposes. And I don't really think we're dealing with planning purposes in this case. So that could be useful, but doesn't seem particularly. So could have a look there. In the practical guidance section, there doesn't really seem anything that's relevant there. So I'll just ignore that straight away. So because this doesn't seem like the most relevant resource here, I would look for something else in Corona's resources. So I'm just going to start by typing trust or trusts. Let's go for trusts. And there's a few different places that I tend to go then to look for useful information. When it's a topic that I know absolutely nothing about, then I will go to the quick overview just to start getting a bit of a feel for the basics related to the subject that I'm dealing with. So in this case, what I could do is I can click on that there, which narrows down the search results straight away to just things from this quick overview guidance. And then I'll just have a look to see if there's anything that relates specifically to trusts, which it does. We've got trusts and settlements there. So now we're down to 75 results straight away. So that would be something for me to look through further, if I was going down that route of using this to try and find the answer. Then the other place I go if I know a bit more about the topic and I know it's complicated, I'll look in the in-depth and do the exact same thing. I'll click on that, narrow it down, and then go down to the inheritance tax bit. So I've had to think about the type of resources. So have I got access to any specialist books? So I've decided that I have in this case, I've got the Tolly's one. I did have a quick look online as well to see if there's anything else out there before this session. I found there was one for Bloomsbury's as well. So if you got access to Bloomsbury's, you could use that. But the point of me showing you these different things here is, well, first off, I think the place that you need to start when there's a bit of complicated advice is you need to figure out what resources exist for you to get the tax knowledge and information to be able to give that advice. Because if you don't do that, then you risk being wrong with the advice that you give, which is obviously the worst case scenario, actually telling someone something wrong about the tax rules. Or second to that is just not giving them optimal advice. The last place in today's world that I would look is probably AI. And I've seen a lot of mixed feelings around using AI in research. But I think in most cases, that's because people are not using it in the way that I think you need to use it personally. And the way that I would be using it is going to something like ChatGPT or Copilot and saying something to the effect of, I'm a chartered tax advisor dealing with this situation here. I've got this scenario. Can you tell me all the different taxes that might be relevant or might impact this scenario? And secondly, can you reference some helpful resources for me to go and look into this further rather than ask it to give you the answer? If you ask it to give you the answer, it's likely to give you the wrong answer. And I think that's where a lot of people are getting frustrated. But that's one last place that I would try if I was really struggling to find a resource here. Fortunately, the first place we looked, the Tolly's place, is probably the best case to start. And so if I was doing this now in real life, going through it, I'd start reading through those bits in the Tolly's book. So just from the little bit of research that we did at the start there, looking at the contents page of the book, we determined that inheritance tax, income tax, and capital gains tax seem to be relevant, and even stamp taxes. But when I asked the person who sent me this, they told me that the in scope taxes for that piece of work were actually just IHT, inheritance tax, income tax, and capital gains tax. Okay. So also before jumping into giving the advice, I know this might seem a bit like the boring side of giving advice, but we need to make sure that we've got a relevant engagement letter in place with that client because you need to protect yourself from one, if you do end up giving incorrect advice, which does happen, then you need to make sure that the terms are set out clearly in terms of what happens there. And secondly, you need to be clear about the fees. How are you going to charge the client for this piece of work? Are you doing it based on hourly charge out rates? Is there going to be a fixed fee? What actually is the scope that you're going to agree with the client? Yes, we know that these taxes are in scope, but do you want to contain the scope more? Because right at the start of this, it feels like a pretty big question, right? Like, what are the tax implications here? It's quite a vague question. And what tends to happen in those cases is the first almost proposal that the client puts forward to you is probably not the most optimal from a tax perspective. And so then you're going to want to think about the different options that might exist to improve their situation. And so the way that you can contain that early on is to agree with the client what work it is that you're going to do for them, along with how you're going to charge a fee for that. That will avoid any fee disputes or annoying the clients in the future. So you should always do that upfront if possible. It actually turned out in this case, from speaking to the person who sent me this, that this client was happy to always do things based on hourly rates. They're a very wealthy person. And so they were not bothered by just incurring fees under an hourly charge out rate. They already had an engagement letter that covered it. And so they just moved forward on that basis. Also, think about what is the output going to be here. Are you going to have a call with the client? Are you going to send them an email? Are you going to write them a report? I'd be thinking about that too at this point because then you can know what you're heading for as an end result of giving this advice. Okay, so that's almost like the background before you can start working on the advice, let's say. Then we can move into our next phase, if that's the right term for it. And the next phase is going to be us actually working on giving that advice, so figuring out the answer, figuring out what the advice is going to be, writing it up, all of that type of thing. So in this case, one thing that's stood out to me is that the client has actually asked a specific question, like what are the tax implications of doing something in particular? And I see a lot of people go back on emails like that and actually just not answer the question. Now, that could be for multiple reasons, right? And it could be that you know that that's not a good way to do it. But the thing is, the client's asked that question, so the least you should do is at least address that question, right? So we need to make sure that we know the answer to that question, or at least address it in some way. But second to that, just answering that question is not going to be a good piece of advice. My kind of almost rule for myself is just giving someone tax information, i.e., just telling them if something's taxable or if they need to pay tax. that to me really isn't advice because you're not helping to improve their situation. You're just giving them like the bare basics. And so I always step back and then think, okay, well, this is the starting point. This is what they're proposing to do right now. Is there any way at all that I can help them to improve that situation with advice? So that could be, could I help them to save tax? Could it be that I can help them de-risk in some way? Whatever it is, I'm thinking about how can I give them some advice that makes their situation better than it currently is, which is more than just giving the answer to their immediate question. So at this point, until you've done the research though and thought about it, you will not actually know whether there's any better options, and there might not be. And we don't even know yet whether the current situation is a bad option, right? Um, Typically, they tend to be when clients propose these things, and it turned out in this case from the person who sent it me that it was not a good option at all. It was very inefficient from a tax standpoint. But we wouldn't know that until we've gone through it and thought about it. So we need to be thinking about it up front in any event. Is there a way that we can make the client situation better? And it doesn't just have to be with reducing tax. Okay, so before you can properly give advice, I always think the first step is to make sure that you understand as much as possible about that situation so that you can start thinking about the different ways that you can help them. So we need to establish as much facts as possible. So we've got a fair amount of facts already that we talked about at the start of the session. But there's some other things as well that are like I think obvious questions to ask, at least to me in this case anyway. Like, how much money do they want to lend here? Is it like tens of thousands? Is it hundreds of thousands? Is it millions of pounds? Because to me, that's going to make a big difference to how the advice plays out. Because if it was just, say, £10,000, maybe a family member or someone that he knows could lend him the money, or maybe there's some other ways to deal with it. So, how much money do they actually want to lend in this case? And thinking, could we ask them, are there any routes, other routes that they know of where the money could be available to them? And then thirdly, like, why is he so set on buying a house? There's an 18-month period where he's going to get access to his money from the divorce. So could he wait 18 months before buying the house? And could he live somewhere else in the meantime? Now, I appreciate that that question there is not to do with tax in particular, but it's relevant to giving good advice around tax. Because if we could just start off by saying, well, why do you need a house? Could you just rent for a while? And could you therefore get like a significantly smaller amount of money? Then you can potentially remove the need for any tax advice anyway. Now, he might be completely set on buying a home. It might not be, but that is something that I would ask about very early on to make sure that I know before I delve any deeper. So, kind of the next bit then is after you've done a bit of initial fact finding, I would always then jump into establishing what I think are the relevant tax rules. We've already talked about using resources like online resource libraries, online books related to tax, etc., etc. But as a tax advisor, you will probably already know a significant amount, or at least something about the topic that you're dealing with. So have a think about what you actually already know. First point is, what do I know about this, or what do I think I know about this? And I intentionally say think there because we should always check, always. I never assume that I know or remember anything correctly because it's very easy to get one tiny bit wrong. So I always check. But think about what it is that you already think you know. Based on what you already know as well in terms of the tax and the facts, like, are there any better potential avenues at this point? Can you think of anything right now before you delve into doing the research and thinking about it in loads of detail? Are there any obvious potential better avenues here? For example, could they lend the money from someone else? Or could they not buy a house and potentially rent instead in that 18-month period? So think about potentially better avenues. If you know that you're weak on a certain area related to that topic, let's say you have a bit of an awareness about something around the taxation of trust, but you're not sure whether you fully know it or not, and you don't know whether it's relevant, just note down the places that you need to go and think about and consider. Essentially, what we're doing here is starting to create like a bit of a plan and a route forward to go from not knowing what the advice is to moving towards knowing what the advice is going to be. So, what places do you need to go and check about and have a look into further? Then you just need to think about being careful and making sure you widen your research as necessary. As this bit, you can also, if you work in tax teams and you've got colleagues, you can ask them about these things. If you work for yourself and run your own business, maybe you've got some other people you can run these ideas past, etc., etc. What it is, just make sure before you jump into it that you start establishing what you know first and then delve into the research. What you don't want to do is miss a potentially relevant tax rule or miss a potential option that's going to improve the client situation. So you do want to be very thorough at this point. To me, this is probably the most important part, well, arguably the most important part of the advice. So this in reality ends up happening almost simultaneously to establishing the relevant rules and doing some research, etc. But then once you've done all of that, you need to make sure that you're clear on the advice that you're going to give. Like you might not know the exact word you're going to use or the detail that you're going to go into, but by the time you've done all the research and you've thought about it, and you should be able to figure out like what essentially do I want to say to this person? Are we going to advise that the route they suggested is good and there's minimal tax implications? Have we got better options here that are going to save them a lot of money? We need to know roughly what those are because we then need to determine what it is that we're going to actually say to the client because we're not going to tell them probably absolutely everything. We're probably going to have narrowed it down into what's likely to be helpful rather than give them like 40 different options or something like that. Now, I know I'm exaggerating a little bit there, but let's say that you've got five options. Three of them are just terrible options, and two of them are good options for that particular client. Then you're probably only going to want to tell them about the two options and not the other three. You might want to allude to them very briefly to let them know that you've thought about it, but you're probably not going to want to go into detail in relation to that. When you're actually giving the advice, so obviously you want to then give them the different options or the recommendations you've got. But in relation to each option, I'll be then thinking about, okay, well, what are the tax implications of each one? Because the client's going to want to know probably very, very succinctly, like what the implication is of each one. So first off, I suppose if this individual ends up loading money from the company that's owned by the trust, is he going to have to pay any tax? And if so, what types of tax? Is the trust going to have to pay any tax? And if so, what types of tax? Is the company going to have to pay any tax? And if so, what type of tax, etc., etc. And ideally, what we'll be doing there is not just be talking in like arbitrary, intangible things. Let's actually put it directly into their situation. So if we know the amount of money that they need to lend, can we calculate the exact amount of tax that they would have to pay for each type of tax that's relevant in that case? Could we calculate that for them and tell them? Is there any deadlines or anything that they need to do in terms of actions, filling returns out, or filing something to HMRC, etc.? And what are the consequences if they do something wrong here? Now, I'm almost assuming at this point that there's not going to be anything ambiguous or subjective with the tax rules here. But often, what is the case with tax rules is that there's a lot of grey, and that is much more difficult then to give the advice in relation to. But we will then need to also explain to them like why it's grey and what we suggest they do based on the fact that it's grey. And then obviously the advice and recommendations. Excuse me. Okay, so at this point, we will have had the options established and the implications, and maybe we've got it laid out in some draft form at this point, like roughly what are we going to say to the client, and now we just need to go and write it up. But what's super important, and I think maybe an overlooked area when it comes to writing tax is before you go and start writing the advice, is just taking a step back for a second and thinking about how am I actually going to present this advice to the client? How am I going to lay it out? So in this case, what's going through my mind is that the client has asked a particular question. And so, pretty much right at the start of whatever I end up writing back to them, I'm thinking that I need to address that so that they know that I've actually understood and done what they've asked me to do, right? And not just gone off on a tangent in some way. So, I'd start off by probably saying something like, this is the question you've asked, these are the circumstances that we believe to be correct. This is the implication of the option that you suggested. Here's all this tax that you need to pay, or this is how much you would have to pay, and this the trust has to do this, and you as an individual has to do this, all of that. But then, if we found an option that is better, we can say something to the effect of, well, because of all that tax you'd have to pay in this case, we don't suggest that you go down that route. But here's the route that we do suggest you go down instead. And we've also got some other options too that you might want to consider. This is almost like creating the executive summary of the advice. Like, if you're not writing a report, you're probably not going to call it that, but that's essentially what this is. getting straight to the point and answering the client's question and actually giving them advice on what we suggest they do and what they're going to have to do on the back of our advice. Then I'll be thinking, okay, well, what does the body of the advice look like? Because we probably do need to lay out in detail the options and the implications, etc. Partly to protect ourselves, and partly so that they have the right to go and check that and see whether they believe the option that we've laid out as a recommendation is the best one for them or not. Because in some cases, it won't be the best option. So in terms of format, then are you going to put this? This is as simple as, are we going to put this in an email? Are we going to put this in a report? Are we going to put this in a letter? Or is it better to pick up the phone and have a meeting with them and just capture something in note form on file? This will depend on the client somewhat and also the how complicated the advice is that you're giving. In this case, it feels like a very complicated piece of advice. And so I would definitely want him to be having something thorough in writing. But a consequence also of the advice being difficult is that if you don't speak to the client and you just put it in writing, they're probably going to find it quite difficult to understand. So in this case, what I'm thinking is I'd have a letter or something documented in writing that goes on file in writing that they can read at their own leisure if they want to. But I'd also be having a meeting with them to talk through it and help them decide exactly what it is that they're going to do. Because they might not agree with the recommendation that you've given in terms of how they should proceed. Got a few minutes. I'm just going to very briefly talk about the writing up of it then. So prior to the writing up of it, I always recommend that you at least write a bit of a brief plan or outline of what you're going to write. So in this case, that could just be like the headings that you're going to have information under and the brief bullet points of what point you're going to make under each section before going to write it up. The reason I suggest that you do this in this what I would do in this case is for a few reasons. Firstly, if you know essentially what you're going to write before you start writing it, then it's going to improve the structure and the layout of your advice. So it's going to be more easy to comprehend by the client. And also it's going to help you to write the advice more quickly. So the way that our brains basically work is that whilst we think we can multitask, or at least some people think they can multitask, it doesn't actually exist like that. We actually task switch, and some people are better at task switching more quickly than others. But every time that you change your brain from doing something, let's say from writing to thinking about what you should write, which are two slightly different tasks, then your brain almost has to reboot into those different things each time. And so it can really be clunky and slow you down when you're writing the advice. And I find that once I've laid out the advice, in terms of what I'm going to write, writing it is significantly easier and quicker then because I know what I'm going to write and I can just purely focus on the writing element. So I definitely do that. I think in this case, what I would probably do based on what I know about the client is I would probably give them a brief email with the key points in. I would probably then attach something that gives detail around the other options and the other implications so that they can have that on file. And I would definitely follow up with a meeting with them. So I'd send everything over first and then organise a meeting with them to talk them through it and help them come to the answer. The meeting's useful and important for a few reasons, in my opinion. You can make sure the client actually understands what it is that you're talking about, which you don't get if you just send them over something by email. So that's definitely one pro. You give them a chance to open into a discussion with you because let's say that they don't think that your recommendation is a good one for their circumstances, then you can essentially brainstorm in that meeting and think about other options and land on something. And also, I just think it's good client service to have those meetings with them. Obviously, not every client will want to meet with you, but in my experience, I've never ever had a client where I've given them some advice, turned down a meeting to talk about it. So that's the way that I would go about it. We'll open up to Q&A in just a second, so you can start putting questions into the chat function now if you want. I'm also going to open up the mic so you can unmute yourselves if you want to and ask it in person instead. Both will be fine. But just before we get there, just a quick mention, or kind of a bit of a summary overview of what we've done and other elements of advice anyway. So what we've just gone through in this session anyway is my thought process to tackling a real advisory scenario. But the thing is, how do you actually go from start all the way to producing that excellent tax advice, regardless of the scenario? So you can do exactly that with the seven-step process to providing tax advice that I've established, as well as a list of the different characteristics that you should ensure your advice has as part of it. So by knowing the process and the characteristics, you will improve your confidence for providing advice for sure. You'll definitely procrastinate less, and your colleagues will make less changes to any advice that you draft before it's sent to the clients. All of this I teach in the tax advice masterclass. A recent attendee said that she no longer fears advisory work and that she found the course extremely useful. I never would have thought that people feared advisory work before, but that's the word that a recent attendee said to me. And a head of tax who put some people on the course said that she had noticed a big difference in her colleagues' confidence, and the advice they're providing is a lot more tailored and focused on what the client needs to know. Overall, a great course that adds value. So if you do want to become really good at providing tax advice and become good quickly, the masterclass is a streamlined way for you to achieve that. So you can head on over to thetaxprofessionalspodcast.com/TAM to get further details and to join the tax advice masterclass if you do want to. And it starts on the 26th of November, so just in a few weeks' time. So I'm just going to put the link into the chat now, and then we will open up to any questions that people have. So you should be able to unmute yourself now and put questions in the chat. And we'll do this for about 15 minutes or so before ending the session.
Hi, Jack. I was going to write something in the chat, but it turned out to be quite long. So it was just whether you have any advice on avoiding scope creep. So kind of straying outside the kind of parameters set by the engagement letter. You kind of mentioned there that the person could maybe delay by 18 months um, to kind of be the other side of the divorce. And it feels like you might be straying into kind of legal points there and things that would be better addressed by a solicitor. Um, yeah, whether you would kind of address that in the advice and just say, this is not legal advice, speak to your solicitor, you might want to think about this, or whether you kind of, yeah, not a very well formed question.
Yeah, I think I know what you mean. I'll talk about specifically what you're talking about there then with the almost the non-tax bit. So
Yeah.
I would probably first off give that kind of suggestion upfront and early by phone call or by meeting, just to put it out there in the air because there's almost two ways they're going to respond to that. Go, no, absolutely not. I want to buy the house. I don't want to wait. In which case, fine, you can just ignore it straight away. Or they might go, oh, you've got a point, actually. I need to think about that. And then what they can do is they can go speak to their legal person, whoever it is, to talk through that and think about that scenario. When it comes to the actual written piece of advice, I would probably say something to the effect of what we've considered here is options from a tax standpoint. What we haven't thought about is other options that don't have any tax implications at all. However, that's something that you could explore, and we suggest that you speak to your solicitor or legal expert in relation to those, or something to that effect, right? So then you're not spending loads of time on it, which I think is probably what you're worried about from a scope creep standpoint. But you're still showing the client that you've thought about it, and it might end up being really helpful for them in the long run. I think it's really hard for us to sometimes think outside of the tax world, if that makes sense. But actually, some of the best advice that we can give almost ignores the advice, the tax bit entirely. We need to help them figure out what's going to work for them first, practically, and then almost like overlay the tax to it. So I think that hopefully will explain that what I would do in this case anyway around that. But scope creep in general is just a really tough thing to deal with, to be honest. Um, one of the things you need to do is make sure that the scope of work is set out very clearly up front. Then, if you feel like you're getting close to scope creep, is probably pick up the phone to the client and talk to them about it before you end up creeping into it, which is easier said than done because you're probably just working on the job, trying to get the work finished as quick as possible for the client. Um, it's one of those things that it's never going to be perfect for sure. What I'd make sure that I do though in the written piece is that the written bit doesn't go outside of scope unless that's been agreed with the client. Because what you don't want to do potentially is try and then charge the client for something later that's not within scope, or end up putting yourselves at risk because you've done things outside of the scope. So hopefully that helps anyway for that scenario. Anything else, Joshua? Or does that cover it, do you think?
No, that's good. Thank you. I think it's good. Yeah, just talking about speaking it through with the client. And yeah, obviously there are risks kind of advising on stuff that's outside of the scope. We need to just bear in mind as well.
Yeah, for sure. Yeah. So I've got a question in the chat here. Oh, so someone said, would there be a chance you could share the steps via email? Um, so the exact 7 steps I cover in the tax advice masterclass, and that's almost intentionally kept behind a paywall because I find it really valuable for people. I don't just want that necessarily out in the ether. So I won't send around the exact 7 step process. But if you're interested in the tax advice masterclass, it's covered in that. What I will do though is I'll send around a recording that'll be available for 7 days. So if you do want to go through and take notes separately, then you're more than welcome to do that. That looks like I'm through all the current questions that are in there. So I am happy to end the session early if that's what people want. But we might as well make use of the extra 7 minutes if anyone is thinking anything at all. If you're thinking it, someone else is probably thinking it too. So I wouldn't be scared to ask the question. Any budget predictions? I actually hate budget predictions. That might sound really odd given that most people in tax seem to care about it a lot. But my view's always been there's no point predicting because you just don't know what's going to happen. So you can end up wasting time thinking about stuff that never comes into fruition. I think the only exception to that is where something's been kind of suggested as likely to happen. So if there's a change that's likely to happen, then I would think about it a little bit differently. But otherwise, I actually stay away from it. That's probably a boring answer, Tom, but it's also the truth for me. Yeah, what do I expect then? So Nix thinks that they're sure. I really do hope that doesn't happen. That would really mess with my training business, actually, because currently a lot of people who enroll in my courses enroll as individuals. I would hate to have to add VAT on top of that as well, because that's an extra 20% cost for people. Now, VAT reduction is better for me, for sure, Tom. No problem, Ada. Glad you enjoyed it. Yeah, I do hope that doesn't happen. I do hope that doesn't happen. I feel like you two are trying to get me to talk about predictions now. Is it like a little challenge you've set yourself? Well, that's a good question, Claire. Actually, I'm going to start with the typical answer of it depends. So the question is, how much time would you spend scoping out the work before quoting / agreeing fees and terms? I want to give you 2 examples, Claire, that I've had recently, actually. So one, if you follow me on LinkedIn, you'll have probably heard about the classic cars project that I'm doing at the moment. So right at the start of the project, what I knew is that there was an individual limited company that owned 2 very expensive vintage cars that were created in like the 1920s. Yeah, no problem, Tom. 2 very expensive cars that were created in the 1920s. The old limited company did that on the advice of their past accountants, but they failed to mention any potential benefit in kind implications. There was about £700,000 of tax at stake, worst case scenario there, and I knew it was going to be a really big, complex project that had high risk for the client. And so I probably spent, I kid you not, probably about a full day scoping out that work, deciding on the fees, talking the client through it prior to them agreeing to it. Part of that is that I wanted them to see the value in the work that we're doing, and I wanted to make sure that they understood that because I knew the fee was going to be expensive. I can't remember the exact fee now. Maybe the first phase of that project was about £14,000, where we were like establishing what options were available to reduce that liability. So that one I took an awfully long time on. On the flip side, about 2 weeks ago, yeah, 2 weeks ago, There was a business that was being purchased by one of our clients, and they literally just wanted to know something about subcontractors and whether there was an employment tax risk related to them. Because this one business they were buying used a lot of subcontractors. They needed to move very quickly because the sale was going to go through hopefully in a few weeks' time. And they needed to just have a steer on like, is there a risk? Yes or no? If there is, how high is it? And thirdly, what tax is at stake if the risk materializes? That I wrote up in about 15 minutes in an email afterwards because we basically agreed it on the call. It was a very tight scope, and so it was very quick and easy to do. It's not often, to be fair, that I do it like that because I do like to draw the scope more tightly to make it very clear at the offset what is in and what is out and what the fee is for it. But it's not always possible, so you do have to be a little bit flexible. But it really does depend, I would say, on the complexity of the advice, how much you're going to charge for it, and how quickly the client needs to move on it. If the client is already on board with that they need to do the work and you know they're going to be happy to pay a fee, then you can spend less time on it for sure. But where that's not the case, in order to almost to convince the client that they need the work and to pay the fee, I spend more time on it. So hopefully that addresses that one, Claire. It's also, I would say, it's a bit of an art rather than a science, scoping out work. There's almost two different approaches that I see where they say something like, we will advise you in relation to this. That is not the approach that I like, though. I like to go, we're going to advise you in relation to this. And in order to give you that advice, this is what we're going to do. We're going to have a meeting. Um, to establish the facts. We're then going to do some research into the tax to establish the options. We'll then pose those options to you in a meeting to see which ones seem likely to be helpful and which ones aren't. And then we'll go away and we'll write up our advice, refine it, send it over to you, and have a meeting with you to talk through it. I tend to draw the scope up like that, which admittedly can be a pain sometimes because you're almost setting out the steps up front before you do the work. But at least that way, if the clients are paying, say, with sending you information and you're having to keep chasing them, you can basically say something like, we will chase you. We expect you to send us information within 7 days of us requesting it. And if you don't, then there'll be an additional fee for any chasers, etc., that we need to do. So I tend to do that as well to make sure that we don't blow the budget because the client is being rubbish with providing the info, basically, which does happen a lot, as I'm sure you probably all know if you've experienced any form of tax work. Yeah, that's a good question, Chris. So Chris has asked, how do you assess a client's willingness to pay a fee before you spend a full day trying to convince them? Often get clients asking stuff and expecting a phone call, discuss it off the record. Yeah, again, not an exact science. In the case of the classic cars work, £700,000 at stake is an awful lot of money. And I knew the fee that we were going for, a 14K fee, was a big fee as well. And that was just the first phase. I knew overall it'd be about a 20 to 25 grand fee for the full project. That to me felt like it was worth a day's time investment. I could tell that the client was really worried because he didn't even know that there was a potential issue here. And when I was speaking to him over Teams, I could just tell that he was worried. The guy actually got referred to me by their current accountant, and I had chats with the current accountant as well without the client there, and they were telling me about the fact that they were worried and that they really want to get this sorted, etc., etc. So there was a lot of signs there, I would say, that made me think there's a pretty good chance of this converting. Now, if someone sends me an off-the-cuff question and I just think they want a piece of free advice, then I agree with you, Chris. I'm not going to spend a full day doing that. But what I'd probably do in that case is offer a call to talk about how we can help, potentially give them some generic information that's not specific to their circumstance and giving them the exact answer in their case, and then letting them know that we can apply it to their exact circumstances if they want to take some advice, and for that they would have to pay for it. I absolutely despise clients that time waste around advice. So I've probably got quite a harsh view around some of these things. You just know that a person is not going to expect someone to say, come and build a wall or to put up some fences in your back garden without paying for it. But people, for some reason, seem to see advice as different because we're just giving them words or a document or something instead. So it's definitely something that really winds me up, and I haven't found out the perfect way to deal with it in all cases yet, that's for sure. Yeah, I would say so, Chris. If you can, you need to see them really, see how they react, see their expressions, the tone of their voice, that type of thing. You will never know for sure because some people have really good poker faces as well. And sometimes I think you just got to take the leap. As I say, 7K, 7 hours to win a potentially 25K piece of work is worth it in my eyes. If it was £1,000, I definitely wouldn't be doing that. And if it's £1,000 piece of work, I'd like to hope that I've already got a standard scope that I could use in that case, so it's quick and easy. So I do also tend to create template proposal documents for standard pieces of tax advice. Cool. So we've just got to 17 minutes past. That's about 45 minutes since we actually started doing the session. So I'm going to call it a day there. Thank you everyone for joining. I do appreciate it. And thanks for the questions that have been sent in as well. I'll send around the recording as soon as it's uploaded onto YouTube. It'll be there for 7 days. Any questions, please feel free to send me. And hopefully I'll see at least one of you on the Tax Advice Masterclass in a few weeks' time. Lovely. Thank you very much all.